Are cooling measures coming soon?
Let's talk about it today.
This is our episode number 5, right? So we'll be examining this interesting news article that we came across. It's by two analysts from Barclays Bank, right? So the article is Singapore seen facing harsh property curbs if boom isn't tackled. Okay, so we're talking about harsh property curbs, right? So the thesis behind the analyst claims is that the property market seems to have run ahead of fundamentals, right? And hence, right, the government would need to impose harsh property curbs, right? Just a caveat over here, we're talking about the private residential market, right? Running a bit too hot, right? Yeah. So it leads us to think about this question whether indeed the property market is overheated.
So in today's video, a very quick summary of what we're going to be covering today. We're going to be asking whether the private property market is overheated and whether cooling measures are coming soon. Last but not least, what are the implications for you, both as a seller or buyer in today's market?
Hmm.
Diving into the first question, is the private property market overheated?
So this is indeed the elephant in the room, right? Is property prices indeed overheated, right? So I'm going to start here by sharing two different perspectives, right? I kind of sense that the analysts from Barclays, when they mentioned that the property market is overheated, they actually benchmark against the GDP growth, right? Yeah, so the GDP growth of 2022 is 3.6%, 2023 is 1.1. This year is going to get closer to 3.5% as estimated by the Ministry of Trade Industry, right? So if you accumulate all the GDP growth up in the last 3 years, it's probably just closing into maybe 7-8%. Yeah, but for Hector, if you could pull up the slide to show how much the PPI increased over the course of the last 3 years, all right, you would have seen that the prices actually galloped past the 8%. So from 2021, the prices are 10.6, 2022, the prices are 8.6, 2023 is minus 0.4. This year we're probably going to like have a positive percentage change. Right. So from this picture itself, if you accumulate up the last couple of years, we're looking at maybe a 20-ish% increase in price, right? Which runs ahead of the 8 to 10-ish% increase in the GDP. So yes, if you benchmark against the GDP growth, but I was thinking because now we are looking at the private property market, right? Where the buyers are actually more the Wild Hill clients. So if you assume that these are basically the top 20% of income earners, it might still make sense, right? If let's say their incomes have run in line with the PPI. Yeah. So for Hector, what's your answer to this? Yes or no?
I think fundamentally we need to look at whether the private property market, whether when we say it's overheated, are we talking about prices that have grown too much? And that to me is a question that a lot of people typically ask. I think it needs to be benchmarked not just according to GDP, but also real median income. So when we talk about PPI, the property price index, it gives us an indication on how the average of private property prices have gone up over the last few years. Like you so rightfully pointed out, right? For the last 3 to 4 years, we're looking at a cumulative growth of close to 20%. So we've seen the PPI as an index number from 100 basis point in 2019, leading up all the way to just past 200, where we are today. When we factor that against the real median income, are people's incomes growing as fast as property prices? The rationale there is very, very simple. If the people's incomes are growing substantially faster than property prices, then I would argue that it's not overheated. But if it's growing way above, like there's a very significant gap between income growth and property prices, then I think it's a cause for concern because it means that a lot of people are putting money into property beyond what they can potentially afford. So when I look at the same data across the last few years, just looking at last year alone itself, the property price index shows a very moderate increase. We are looking at about 5 to 8%. In that same time frame, the real median income accounting for inflation has actually gone up 3.4%. And the year prior to that, in 2022, we are looking at a negative growth in real median income, meaning that people's money have shrunk. Factoring the other factors such as the core inflation. So when we talk about core inflation, we're talking about the major inflation of prices for a lot of items that are essential for living, and housing is one of them. That same number also grew 3.5%. So incomes have gone up 3.4% in the last year. Core inflation has gone up 3.5%, but property prices have gone up 5 to 8% in that same time frame. So when we look at that basis points in terms of increment, one can argue that the private property market is overheated. But I think the question that we have to really ask ourselves here is that increase in the PPI reflective of a significant difference between the growth of median income and inflation? And I would argue that it's slightly above. I would say that it maybe is the market's hot, but I don't
Mm.
essentially think that the market is overheated too much.
Mm. Right. So I'll kind of just add to the discussion because I hear you because if you look at the median income, that's probably the fairest way to look at the income growth, right? But I still feel we need to understand that this is private residential property market. It's not a market for everyone. It's probably even not the market for the person in the middle, right? So just by looking at the proportion of private housing as of the total housing uh quantum, right? Or the housing units, right? We're talking about the top 20% probably like of or the top 20 to 30% of people affording private housing. So the things that maybe I want to pick your brain a bit is maybe we need to have the data of those people who are in the top 20%, whether the income growth have indeed been in line with the PPI growth. That's number one. Number two is that we hear of stories of, these days, because Singapore has gone wealthy over the span of the last 50 years. So there might be some internet generational transfers of wealth that might allow people to afford housing beyond the income part, right? So I'm not just solely talking about inheritance, right? I'm talking about, parental support in terms of like the down payment or even, the monthly installment. So this is the part that I feel that we probably also need to take a look at.
Well, actually, I do have data on that portion. So Clive, there are a few things here that I disagree with you.
Mm,
I think when it comes to the income, yes, that's a very big determinant of property prices because there's a direct relation to affordability of those private property. But I do think also that for the upper income, when we talk about the top 20 percentile, right? The upper tranches for income, average income per person in Singapore, those actually have actually gone down in 2023. So when we look at the data in 2023, we see that the income growth for the top 20th percentile actually haven't gone up a lot. It's actually about 1.9% versus the majority of the group. So we are looking at a phenomenon where we see the population's income growing in real numbers, accounting for inflation. It has grown significantly across the last year. At the same time, the top earners' growth have not grown as fast. So
mm,
I disagree on the point where we talk about, or maybe those within that 50th percentile, the median range, right? Not being able to afford private property. I think it's an aspiration that a lot of people
mm,
aspire to accomplish in their lifetime and have actively made plans to accomplish. So I also want to bring back to the point about, when we talk about private property market being overheated, that seems to be the suggestion of the article. And the reason why I think the article seems to suggest that is because there's a reflection on public sentiment. We are hearing news about million-dollar HDB flats. It's been in the news for the last 2 to 3 years. The growth in the number of million-dollar HDB flats is very sensationalized. We
mm,
also have news such as OCR properties, right? The recent launch Trump Up, hitting close to 2,600 PSF. We have Also, similarly, in the private property market, earlier in the year, we had normal grant in Woodlands, going for an average of about $2,000 PSF, which is crazy in terms of public sentiment. People don't feel like that particular price tag is justifiable, but the market seems to have appetite for it. So my point here is that reflection of this public sentiment seems to give the overall feeling that prices are running away, which is why I think the article is using that as an angle to tackle this particular portion about the need for cooling measures in an overheated market. So going back to that basic premise about whether the private property market is overheated, excuse me, I do think that at this stage, based on all data, right? Growth in income, accounting for inflation, growth in GDP, and the private property price index going up. I do think that it's in line. All these are in line. So my
Mm,
argument here is that the private property market isn't actually overheated, but the public sentiment seems to think that it's overheated because of all these sensational news headlines about
mm.
new highs in the private property market.
Mm, yeah, so just to close up the discussion a bit, um, I do agree that uh the private property market may seem not to be overheated at this juncture, right? And with the sensationalization of news, right, it gives the perception that everything is going up in price, perhaps it's not sustainable. But it's also intuitive to look that it's not just the private property market that is booming. We're also looking at the HDB market, especially HDB resale uh price index, which is not shown here, right? We can look at the HDB resale property price index called the RPI. The RPI has also registered substantial gains over the course of the same period. So which supports the view that the PPI price growth is indeed sustainable in that perspective and not overheated. Right.
Mm. So let's take that assumption, right? So we think that the private property market isn't overheated. What we have on screen here, the data seems to reflect that the take-up rate for new launches is almost 1 to 1, meaning whatever has been introduced into the market as new supply has been taken up. So units launched represented by the gray bars are almost the same length as the red bars, which is the units sold. So even though people feel like private property is the market for private property is overheated, but the take-up rate in the last few years seems to also be contradicting this point. Because if people think the market is overheated, prices are too high, we naturally wouldn't expect the take-up rate for new units at those new price points to be close or even similar. But actual data, this is the part that's interesting, Clive. The
Mm,
actual data actually reflects that the take-up rate is almost 1 to 1. Whatever is launched is absorbed into the market. People are buying at this new price point, even though public sentiment seems to think that prices are too high. So then it begs the question, right, on whether are cooling measures coming soon. I think it's a
mm,
very natural extension of that assumption. If it's overheated, we need something to cool it down, right? So our cooling measures are coming soon.
mm. Right. So indeed, I mean there have been some market rumors lah about cooling measures coming soon. So among our circles, so that's the rumor that's why the developers decide to push out, 6 different projects in November, giving rise to the November buying frenzy that we talked about in our last episode, right? Because they are anticipating if cooling measures on the horizon, then must as well push up all the projects in November, right, to get the record sales. And I always feel it's kind of like a chicken and egg. If we think that cooling measures are coming soon, so there will be this self-fulfilling prophecy where there will be a buying frenzy, which is seen or evidenced by the monthly sales record of 2,400 units in November, right? And then the cooling measures will come because it seems that the market is overheated. It's more like if you think it's coming soon, then you act. It's like Hector is if you think the price of fish is going up today in the market and you go out and buy, the price of fish will go up. And that will prompt the government to do something. So I feel like the notion of us thinking about it and maybe preempting it itself could lead to cooling measures. You get what I mean? It's not like it's
Mm.
not like yeah, it's a bit like a self-fulfilling prophecy. Yeah. So
So is
so
it, so that's an interesting point. Huh? So you think it's a self-fulfilling prophecy, it's something
mm,
that creates the result that it's trying
yes,
to avoid,
yes,
right?
yes.
So because you think cooling measures are coming, therefore you buy into the frenzy right now,
The
with regards
developers
of all
act. Yes.
fundamental, all fundamental economics.
Mm,
Then because you add on to the fire,
mm,
the prompt for cooling measure comes closer. I think that's a very valid,
mm,
valid point. But we have to take into account that when we talk about the property market, one thing I feel that people always overlook is the fact that the market is regulated. What's interesting about the Singapore property market is that it's to some degree a free market, but to a very large extent, there are a lot of policies and regulations within the market, which have to regulate things like price points, things like eligibility, and also other factors such as your loan to value, for example, as an example. So you have to understand this active intervention in the form of cooling measures actually help to stabilize and sustain the market, which goes back to contradict the point that a lot of customers that we meet are on the waiting game. They feel that prices are too high, therefore they choose to wait because they believe cooling measures will cool the market and then substantially bring the asking price down, and then it's a better time to enter the market. But going back to your point about it being a self-fulfilling prophecy, I think what's interesting here is that these cooling measures work, in my opinion, to quite a good effect on what they're trying to tackle. And we'll talk about the individual ones in a bit. Other policy measures that people don't pay attention to is that the government, the Singapore government, has a very active role in maintaining these prices. Stability is one thing, cooling measures is another. And what I mean by this is that you might remember at the start of the year, um, for those who don't know, in Singapore, sorry about that. For those who don't know, in Singapore, developers can acquire land in mostly two ways. First one being an en bloc, and another one being government land sales, GLS. So at the start of the year, there were two very noticeable bids for GLS that were rejected by the government, meaning the developers put up a bid and that price point was deemed too low by the government, and the government actively rejected those bids, refused to sell the land at a particular price. That to me is a very clear signal that the government has a very active role in maintaining the price because as a business, as a profit-driven business, right, by the developers, you don't necessarily see the case where they will buy and they will sell without a profit. So having a substantial asking price for the land adds to the cost, which adds to the stability of prices. So
mm,
yes, the question here is, are cooling measures coming soon? Are they a self-fulfilling prophecy? But more importantly, we also have to understand whether those increments in prices actually are acceptable to the market. And as we have talked about in the previous slide, the take-up rate is almost one-to-one. So now, I think when we look at cooling measures, we need to give the audience an understanding about what cooling measures are and where they have impacted our journey, right, across the last few years.
mm, right. So I kind of have a sudden point to add on to what you mentioned earlier about like because you threw in a point about the government sort of being able to keep the prices stable or in fact, let's put it bluntly, prevent a sharp fall in the price. So viewers will know that in Singapore, right, the property market is tied very much to the health of the economy. Especially when our banks have 50% of our loans that they'll dole out in residential loans. So I think it's also the idea that the cooling measures is not meant to crash the market. It's just when prices are running a bit too much, it moderates the rise in the price. That's why, like for Hector, you can see in the price chart, the prices are rising ever since 2019. Now the question is whether the rise is indeed like has been controlled by the cooling measures. Yeah, let's take a look at the cooling measures.
Yeah, so across the last few years, when we look at the PPI, right? So your blue line and your red line, your blue line and your white line, right? White line talks about all residential private property. Blue line is for non-landed private property. So essentially your condos, your apartments, and therefore. So if we pay attention to the two, the graphs definitely run in similar directions. There have been several rounds of cooling measures across the last 5 years, 5 to 6 years. So just narrowing down on those few cooling measures, we see an introduction of additional buyer stamp duty. So increments in additional buyer stamp duty, the three represents that it's the third round that this has been implemented, meaning there has been two prior revisions to the percentages for ABSD. LTV has gone down, loan to value. Now, loan to value is an important portion here. ABSD is a tax on buying an additional, your second, your third, your fourth residential private property. LTV impacts your loan eligibility. It impacts your affordability of the property. Loan to value has gone down, meaning at the valuation of the property, the percentage loan that maximum percentage loan that you can get is going down. And this has been revised 5 times prior. So LTV 6. Close to the end of 2022, we see another increment in ABSD. And now we also see an additional measure, which is your TDSR. Your TDSR has actually gone down, meaning now you can only use a smaller percentage of your monthly income to service your loan, effectively reducing your loan quantum. Same thing in the recent last two measures, we also see increments in the buyer stamp duty and the additional buyer stamp duty.
Mm.
Now, Clive, I know you have an opinion
Mm.
about this particular set of cooling measures. Now, when we look at as the market is galloping, right, you see the graphs corresponding to certain points in time when the PPI has now seen a significant uplift. It's gone to the top right of the graph, and those measures have come in, and we still continuously see the graph go up.
Mm.
What's your opinion on the cooling measures? Were they effective, and are they a self-fulfilling prophecy,
Mm.
like you mentioned?
Yeah. So before I give my take, because I think the viewers are can be quite a bit too saturated with the acronyms. I kind of just want to round out on what each of these individual measures does. Like for Hector, do you mind going back to the first point when you actually highlighted LTV as well as the ABSD? Okay, so for the viewers, right, the additional buyer stamp duty, right, what it is it's meant to reduce the effective return on housing investment. So for example, if let's say you buy a house for 1 million, the additional buyer stamp duty is 10%, right? So that means you pay 110% of the housing price. So your housing price has to appreciate more than 10% for the housing investment to make sense. So that's how it reduces the speculative demand for housing, right? Then for loan to value ratio, right, it affects the down payment amount, right? So this directly affects your ability to purchase. So for example, if the loan to value reduced from 80% to 75%, the upfront cash or down payment that you have to put up it increases from 20 to 25%. Okay. And finally, so the next one for Hector, there's a TDSR there, right? Yeah, TDSR coming down, it actually limits the amount of your monthly income, right, that can be used to service a housing loan, right? So in this case, when the TDSR were to come down, that means the proportion of the income. So right now it stands at 55%. So you can only use 55% of your monthly income to service a housing loan, inclusive of all loans. That means if you have a car loan, you have a renovation loan, you have whatever loan, it all goes into this 55%. So indeed, right, the government has come out with this slew of measures, right, to prevent too much borrowing, or let's put it simple, more prudential, macro prudential type of measures to ensure that the borrowings of households is kept at a sustainable level, right? And so the last one is to the last point. There's actually a small buyer stamp duty that increased there, right? So apart from the additional buyer stamp duty, which usually applies for second properties and above for Singaporean citizens, but for foreign purchasers, it comes in the first purchase. The buyer stamp duty applies for all types of buyers. So if the buyer stamp duty increases, it also kind of reduces the effective return on housing investment. So amongst all these measures, you can see that the government actively partakes in maintaining, right, the price growth, and as well as making sure there's not over borrowing. So back to Hector's point about, like, uh do I think that cooling measures are on the cards? I mean, it's quite obvious that through these rounds of cooling measures and through the effectiveness of the cooling measures I've just mentioned, it has very limited effectiveness lah. right? Indeed, right? My immediate take is cooling measures are not on the cards in the next 6 months, simply because it's been blocked out in this diagram. But the PPI actually moderated in third quarter. We're looking at from from July to September, right? The PPI actually fell. So it's a bit of a respite lah for the government to wait and see what happens to go out in the next 6 months. But of course, we know the buying frenzy in November 2024. We know that record prices has been set in the RCI and CCI in our last recording, the video that we have just presented. So I think the government sort of acts a bit more retrospectively. They need to see like maybe 2 quarters of very strong PPI growth before taking action. Yeah. So that's my hunch. I mean, of course, like there have been rumors about elections coming, people have been unhappy with rising property price. But let's say face it, I mean the government's job is not trying to make private property prices affordable. I mean, that's HDB, right? That's not private property. Yeah. So for Hector, like do you have the same views?
I can't say I mean, none of us can say when cooling measures are coming. That's your guess. The audience guess is as good as ours. In my opinion, not to say that cooling measures have not been effective. That's where my disagreement with you comes in. I do think that cooling measures have effectively helped to stabilize the market. But you so rightly put, right? If we are not talking about just returns, if we are looking at stamp duty. Stamp duty is a tax, whether is it additional buyer stamp duty ABSD, whether is it buyer stamp duty BSD, right? These are all effectively tax which increases the price tag on the property that you need to buy. And it's an artificial measure to say, hey, if you want to own a second or third one, you better have like a lot of money to pay for it. And the tax goes to the government, right? The stamp duty is paid to IRAS. So I do think that we cannot say for certain that cooling measures are coming within the next 6 months, next 12 months, but I do think that they are on the cards. The rise in the private property index, the private property price index, the PPI, seems to suggest a very high, significant growth in a very short period of time, which is where the cooling measures might come in. I can't say when, but I do think that if I were to guess, it's going to be sometime next year. And where it's tackling on in terms of cooling measures, whether is it tackling on speculative demand via ABSD, or whether it's trying to increase the prudency, don't allow people to borrow too much money because that could cause a big hoo-ha in the entire population since we have a very high home ownership rate. So I do think that if there's anything, it's probably going to be tackling on rather than through the taxation route, it's probably going to be tackling on the borrowing ability for most buyers out there in the market. And sellers may think, well, it's not my concern, right? I'm selling my property. But most of us selling the property do have a replacement need, right? You sell one to buy another one. So it affects you, you're going to turn into a buyer soon. Also, the price tag that you're asking for may be within range for the borrower, for the buyer, but because of additional cooling measures that may come in the time to be, you may find buyers just not being able to secure the loans that they need to be able to buy the property they're trying to sell. So both in the primary market, it affects buyers mostly, but also in the secondary market, in the resale market, there's going to be a very big impact on, in my opinion, on the resale prices.
Mm,
Sellers may not be able to command the prices that they want, that are due to them, simply because buyers just don't have the ability to borrow. So you're going to have a much smaller market of ready buyers out there.
mm. I kind of just want to add on to the point. Uh, I just qualify myself. I'm not out there saying that cooling measures are not 100% effective, right? It has limited effectiveness, right? Not because the thinking behind those cooling measures are not good, right? But I think they are like mitigating strategies that people have with regards to all these different measures. Like for instance, if we are looking at additional buyer stamp duty, right? Indeed, there are ways where realtors like us, we can help clients restructure their property portfolio such that Singaporean citizens don't have to pay for ABSD, right? Especially if the household of a married couple can buy two properties. So ABSD doesn't apply to a household. Household can own two properties, right? Under the husband and wife's name. Then second, right? The TDSR, which is a proportion of monthly income that can be used to service a housing loan. There are strategies where realtors like us, we can help clients, with their property plans where they are able to, if they have some spare or reserve funds, they can actually put up some additional funds to actually be able to have higher loans. And last but not least, like with all this LTV or BSD, it kind of means that people have to put up more upfront cash lah with the housing purchase. But these days we know there's intergenerational transfers of wealth and income. So for Hector, I know you also heard of stories about clients, when they go to the show flat, they bring their parents, some bring their grandparents. I mean, they're not just there to, see whether the show flat is good for their grandkids or for their kids, right? They're probably there to help also chip in with the checks. So you in this environment where we have rapid wealth growth, where there's intergenerational transfer of wealth, it's hard to see cooling measures having a very discernible impact. But maybe just to throw some red meat to you, if you think that there are cooling measures on the card, which do you think are the levers of cooling measures that the government will touch, to kind of make it more effective in ensuring a stable property market?
I'm afraid to say this, but I do think that it's going to be the LTV route. So if I were to make a guess, it's going to be a further reduction in LTV for private property at via the bank loan, and also potentially a reversion back to a 4-year SSD, a seller stamp duty. So I do think that in stabilizing the market, they want to make sure that people who are buying into the private property are prudent enough, but also they make up a substantial homestayers rather than just speculative. Because when your private property market is propped up by a lot of speculators, then it becomes a bit scary because those who are looking to buy may not be able to afford due to the cooling measures, but those who are looking to sell are able to offload and potentially make a good pot of gold, right? So I do think that the seller stamp duty active period reversion back to 4 years might be something on the cards. Most
And
people don't realize this, but initially when seller stamp duty was introduced, it started at 4 years,
yeah, so
meaning
I'll say,
you couldn't sell without penalty within the first 4 years of holding.
yeah, sorry, it's Hector. I was saying, just for the benefit of our audience, because just now I explained the still other measures. So how the seller stamp duty works and how does the increase in the seller stamp duty help to, cool down the market? Maybe you can explain a bit.
So the way I look at it is that when you are holding on to a property, if you are trying to dispose of the property, sell out the property within the first 3 years, which is where we are today, within the first 3 years of holding the property, you are liable to pay a stamp duty. You're liable to pay a tax, known as an SSD. So when it was first introduced, that holding period was for within the first 4 years. Meaning, if you sold, I won't go into the specifics, but if you sold your property within the first 4 years of holding it, then it becomes taxable. After 4 years, you sell it, there's no tax on it. Then it was subsequently revised to where we are today. Now the holding period is 3 years, which is why you hear a lot of property investors buying into the new launches, simply because the new launches take roughly the same period of time to build, anywhere between 3 to 5 years. So when they buy the property, the seller stamp duty holding period starts from the point of exercise. So by the time the property is built, it's TOP, those who are looking to flip the property are able to do so without any penalty. So my guess here is, to your question, what forms of cooling measures might come ahead? I do think that there could be revisions on the LTV and also an extension on the SSD back to 4 years.
Hmm.
And that's my guess. That's my
Hmm.
guess.
Right, fair enough.
Okay, so wrapping up this particular question, right? And the topic itself. So we dived roughly something into the question on what the implications are for our viewers, right? Both as a buyer and seller. But I also do think that there could be other implications, right, beyond just affordability and the holding period for selling the property.
Right.
Yeah.
So I was thinking like, since you bounce out the questions, what are the implications? Could we start from, let's say, a prospective bias? Like in view of the backdrop of potential cooling measures, we have so much news coming into uh the market, not just property, but global news. Like what can prospective buyers anticipate, now that we are just a few days left in December and going to 2025.
Why don't you start, Clive?
Yeah.
You see,
So
yeah.
I'm answering my question first. So I personally feel that uh like time in the market is always better than timing the market, lah. Right? So in any case, property purchase requires leverage, right? Which means that even if prices could, it might not necessarily mean that the buyers would be able to obtain sufficient loan to fund the purchase, right? So I give you a mathematical example. So for example, let's say like what Hector mentioned, if the LTV is indeed going to come down, let's say from the current 75% to 70%, right? So 70% of a slightly lower price means that you will need to loan less, but then you have to pay a higher down payment at 30%. The down payment will have to increase by 5%. Right. So in a sense, buyers might not be able to afford the property even if the price comes down because they have to put up a higher down payment. Right. And then the past price trends have shown that the clear picture is that the prices will continue the upward trajectory in spite of any cooling measures. Not to mention that the cooling measures are not effective, it's just of limited effectiveness. So the key that we have for our clients or prospects is that, buy when they're ready, checked out your financials, right? Buy into the right projects, do proper financial prudence checks when buying. That's when we can come in, right? Meaning that, we help clients or buyers also set aside sufficient cash reserves to weather installment payments in the event of unexpected job losses or increased commitments. A lot of things could happen in 2025. Yeah, that's my take.
So financial, so let me understand this. You're talking about buyers getting ready to buy, their purchasing power is coming down potentially.
Mm,
So therefore they need to exercise more prudence, right?
that's right.
Okay. I think my point here is somewhat similar. I think there's always a need for financial prudence. We are anticipating um we're anticipating the purchasing power of buyers to come down if and when cooling measures are introduced into the market again for the next round. But also, I do think that we have to segregate these buyers into two broad groups. When we talk about property buyers, right, we are talking about people who are buying for own stay, right? They're going to be substantially staying in that place for a period of time. We're also talking about property investors who are looking for rental yield, who are looking for potentially flipping the property when it's ready. We're talking about a new development. So when we look across those two groups, I think what's important here is to understand that just because you're buying into, it's all about managing expectation. Just because you're buying into a homestay, excuse me, you don't necessarily want to buy into an area right now that fulfills your needs and not have any other considerations. I argue for the point that financial growth in your property is as important as the income you're making. You're going to buy into a homestay, right? I'm talking about the issue of delayed gratification. If you are going to be putting a substantial portion of your income and your savings into buying that property, I think you need to really do your homework, speak to a trusted advisor, speak to friends, understand what you're getting yourselves into. Meaning, if you don't buy into a good property, you don't buy into one that's going to move with the market, you're effectively not participating on the market. You're not riding on that curve on the PPI. So to me, that is a source of heartbreak when I speak to clients like this because a lot of money goes to the property. That money is being wasted, so to speak. I feel like that that neglect on selecting the right property, the good development, versus the expectation of wanting to live in a particular area for a short period of time, maybe for your kids' needs, right? For school, for being close proximity to work. I do think that it's important that buyers manage aspirations and reality. You want to exercise prudence, yes, but you also want to choose the right property. Same thing goes for the investors. If you're thinking buying into any new launch is going to be a surefire way, there's going to be rental yield, I would advise you to be cautious and look at the broader picture. I'll give a very simple, I'll give a very simple phenomenon, right? We are seeing people working from home. We are seeing hybrid work arrangements. It's not uncommon for your friends to be saying, oh, I'm working from home on Mondays. I'm working from home every Wednesdays and Fridays. This is a current arrangement in the work setting environment right now. So when we talk about these kind of phenomena, we talk about foreigners not being able to buy property, foreigners leaving Singapore as well into other markets like Hong Kong. Then you're looking at an expectation that your rental yield might not be as high as you think. Your rental demand might not be as high as you think. So this goes back to the point about opportunity cost. I think that's something that's often overlooked. So the implication of a cooling measure ahead is be safe, choose the right property, and as always, work out the necessary financials for purchasing your ideal property to meet your needs. And more importantly, you want to have a safety buffer. I think the point that you brought up about safety buffer is extremely important. Do not put all your eggs into one basket. Speak to someone, select the right property, just between you and me, Clive, not every property is a sure win in Singapore. Even though we've got a very good, stable, hot market, I don't think we necessarily would advise that people just close their eyes and buy any property.
Mm, right. So I think from the buyer side, the message is pretty simple. Buy prudently, have a cash reserve set up. Right. How about from the seller's perspective? Like how would a prospective seller approach the market in view of all the things we have talked about?
Expectation, I think it's all about managing expectation. I think sellers need to understand that your pool of buyers may potentially shrink, like you so rightly mentioned. If cooling measures are out of the way, if it reduces the purchasing power of your prospective buyers, sellers need to understand that they may not command the price that they want to. I think it's always a very interesting phenomenon because it's market forces, right? Sellers want to sell high, buyers want to buy as low as possible. So where realtors like you and me, Clive, come in is that we try to manage expectations for them to meet and transact on the property that they want. In my opinion, I think sellers need to do a little bit of homework in terms of understanding where they are in terms of their property journey. If I'm looking to upgrade, right, I'll give you an example. If I'm a family of four, I have two kids, me and my wife, two kids of us. If I'm looking to upgrade to another property, I want to make sure that I plan for it. I want to make sure there's sufficient buffer for me to market my property, for me to be able to secure my property. What I see a lot of sellers do is, and this is a very intuitive thing. We all want to look for that ideal place we want to buy, and then we proceed with selling. The majority of us don't necessarily have the funds to make the purchase first and then sell our current property. So understanding that your property grows, and this is the participation point I was mentioning earlier, understanding that the property that you're living in right now has grown with the market, number one, helps you with securing your next purchase when you upgrade or when you right size when you're a bit older. Second point here is you need to plan for the sale. I personally don't advise clients to find the property that they want and then start marketing their existing property for sale. Simply because most of the time, this is the portion on timeline. Most of the time, the timelines don't quite match, or there's very great difficulty in matching the two timelines. So I do think that the implication here for sellers is to start planning your journey. If you're planning to upgrade soon enough, let's say you're going into the resale market to buy a bigger unit for your family needs, then I would advise that you at least have about 6 months in advance. Start speaking to an agent, plan out your timelines, give yourself time to market the property so that you can find your ideal buyer and at the same time be able to make as seamless as possible a transition to your next property. Don't only sell when you don't wake up one morning and tell yourself, okay, I need to sell my property within a week because I saw this other great property that I want to buy across the street. So I think planning is key for sellers. And if the PPI is reflective of anything, now's a good time to sell when the
Mm,
market is accepting, right? When we talked about this in our UK videos, we talk about this in our Trump Park videos. there are a lot of prospective buyers out there.
Mm,
There were only a selected limited supply of units. Most units were sold. There's a very high percentage that were sold, but there's still a lot of other buyers out there in the market who did not get their desired units at UK or Trump Up or Nava Grove for that matter. So where do you think these buyers will flow to? I argue that a big portion of them is going to flow into the resale market. So if you're a seller right now and you do have plans to upgrade in the future or transit to another property, I think now is a good time to start planning for your sale.
mm. I mean, I couldn't agree more. Just to add on a bit to Hector's point about like how we usually advise clients in their sale process is that we help them plan out the timelines. But also more importantly, I think in the hunt for the next property, because sometimes um sellers can be a bit more emotional on the house. So we help them see whether this is indeed the right entry price. Because as it says that when sellers are selling a house, it's easy to buy, but next time, they might think of, right sizing or, upsizing their house again. And that's why we also help them enter at the right price. Right. So all in all, I think for sellers, it depends on the objective of the sale. If it's um if it's a right size move where people are kind of retiring to cash out to the right size, I think right now we are at the highest point of the PPI. It's probably a no-brainer to plan selling right now. But of course, for buyers, I for Hector, I do want sorry for sellers, I do understand why some sellers they sit on the fence. They're like, let me wait for me to find my ideal home first before I sell because um, so a house it's a big ticket item. It also carries a lot of sentimental value. So sometimes they feel like I need to be able to find the right property before I sell. So it could be a simple process where we help market the property first, while at the same time we do the scouting. It's a bit like a chicken and egg. So if you don't plan to sell, you might not plan to buy, and even if the right property pops up, you might miss it. So our point is not about like getting our clients or prospects to sell first, buy later, but to manage the process such as seamless as possible. So it also opens up the opportunity for us to actually narrow down the list of expectations so that we can scout for the right property to meet the needs lah, with the requirements uh that are deemed as priority. Yep.
Yep, I think that's a good point. So manage expectations, speak to a trusted advisor for us, for you to manage your timeline. And if we've been of any help, you can look for Clive and myself. I think that's where we want to end off the video.
Hmm.
Right, Clive? So
Right.
probably that's all the time we have for today. Till the next time, we'll speak to you soon.
Yes. Till the next time. Bye bye.
Bye bye.